Welcome to it. Packaging Group Nampak reported that trading profit grew 13%, but the firm reported that its net foreign exchange loss climbed amid foreign currency shortages in Nigeria. To refinance its debt, Nampak last week proposed a rights issue of up to 2 billion rand to meet its debt obligations, triggering its worst one-day drop as the share price plummeted 30%. But for more on the figures, we are joined by Eric Smuts, who's the CEO of Nampak. Eric, thank you so much for your time. In an environment that is characterized by supply chain issues as well as high commodity prices, take us through the period that was for Nampak.
I think, first of all, it's worth noting that we had very good first half results, the first 6 months of our year, and then the second 6 months, turned out to be completely different. I would like to believe that the first 6 months is a fairer presentation of the underlying health of the business. But during the second 6 months, we incurred very big extraction losses of getting funds out of our Nigerian business. There was quite a buildup of funds during the first 6 months where we couldn't access liquidity through the forex market. And then in the second 6 months, we actually had to extract more, some dollars through the parallel market, which came at an enormous premium. So I think that put quite a hole through our financial results. As you pointed out, at a trading income level, we actually grew profits by about 13%. But once you net off these forex losses, the position looks very different. The other main feature of our results was a big impairment, or a number of impairments we had to do. But interestingly enough, these were what I would term purely accounting entries. It had very little to do with the underlying health of the business. It was simply as a result of increased global risk premiums and interest rates. And as an example, our Angolan business that did exceptionally well, much better than last year, we actually had to process a bigger impairment, which was quite hard to stomach given the improved performance in that business. So, as you know, our underlying business is still performing well. The food operation did not perform well, but the core business, which is our beverage can business, performed very well, and hence the reason why we are saying to investors that support the capital raise. I think it will strengthen our balance sheet, and then we can sort of focus on managing the business rather than just keep the banks happy and manage covenant levels. So underlying business still strong, but went through some tough times during the last 6 months.
Let's talk about the Nigeria side. I mean, you're seeing a stable demand, but what's your sense of the economy? Are you seeing concerns come through, and which part of the business are a reflection of any concerns you may be seeing on the economy side?
We are very concerned about Nigeria. First of all, governance. I mean, the way they manage the economy, I think, can be improved upon. And we've certainly seen weakness coming through on our general metals business. So it's a small business. The bulk of our business in Nigeria is in beverage cans, where, like I said, the demand was still stable. But in the rest of our business in Nigeria, that's producing general metals products, demand has really come off, and we're reassessing whether we should be in that business at all, and I think it's a very good likelihood that we'll exit that part of the business. In our core business, the beverage can business there, we are concerned that demand will also come off. Our line there at the moment is fully utilized, but it only produces one side of can, the smaller 330 ml can. We do have the tooling, etc., on site to change that line and give it the ability to produce 500 milliliter cans, for which there is also growing demand. So should volumes come off in the short term, we can actually convert that line to start producing 500 ml cans as well. And as a result, we should be able to maintain a good utilization on that line. But yes, the overall Nigerian economy is taking a lot of strain, and I think a lot of it is self-inflicted. I think if they can improve their forex allocation, things should improve for that economy.
You mentioned the DivFood side, reporting disappointing results. What are some of the operational challenges that you experienced post the restructuring that may give the viewers, I suppose, a sense of why you're not seeing that profitability that you're looking for?
I think it was a combination of a little bit of bad luck. When you restructure operations and you start up equipment in a new site, there's two things you need. First of all, you need the skills, which we didn't have. A lot of our experienced employees that came from Gauteng were not prepared to relocate down to the Western Cape, so we lost some skills. But secondly, then we had supply chain disruptions, causing us to have to start up some of these equipment on, let's call it, non-ideal tin plate. So tin plate with the wrong specifications and so on, which made it harder for operators to get the equipment going. So it was a bit of a combination of, let's call it, new skills and supply chain problems that resulted in very low efficiencies, and therefore we couldn't get the volume throughput. Things are improving now. It will take time to build the skills, but I think we're making good progress, and with the right level of inventory behind those machines, we're in a much stronger position to give a credible result.
Before I let you go, you mentioned there that proposing a rights issue of up to 2 billion rand to meet your debt obligations. Just quickly, why should shareholders vote towards it?
So that question is simple. Is Nampak still the underlying business healthy? And my answer is yes. So if you look at the last 10 years, how did we get to where we are? We spent enormous amount of capex. In fact, close to 14 billion rand, where going forward, we require only about 350 to 400 million rand per year. So on a 10-year basis, that's, let's say, 3.5 to 4 billion compared to 14 billion. So we got rid of some of the businesses that were burning cash, like our glass business. So the underlying beverage can business is still very healthy. It is producing cash. It's got strong market-leading positions, and hence, we can leverage this and should give investors a fair return.
Eric, thank you so much for your time. That is Eric Smuts, who is the CEO of Nampak, taking us through the company's results for the period that was, mentioning their reasons why shareholders should vote towards the up to 2 billion rand rights issue. And quite interestingly, in the company's results presentation, he did outline the 10-year period for Nampak, explaining to investors how the company found itself with such a high debt level and why the balance sheet needs to be delevered, why they need to pay down that debt. But looking at the markets now, Asian equities and commodities rose as traders bet on further reopening of the Chinese economy from COVID restrictions. Oil advanced on the prospect of more demand from China as OPEC Plus kept output steady and sanctions on Russian crude kicked in. Locally, the rand strengthened in early trade ahead of a meeting by the executive committee of the country's governing party to decide the fate of President Cyril Ramaphosa. Investors have been nervous over the developments surrounding the president, with the rand falling over 4% last Thursday against the dollar before recovering. In other news, we had retirement fund administrator Alexander Forbes raising its interim dividend even after its half-year profit declined. But to talk to us about the market developments, we are joined by Bright Khumalo, who is from Vestec Asset Management. Bright, thank you so much for your time. Your sense of market sentiment right now, given that we seem quite enthused on hopes that China is slowly reopening. Bright, just reiterating that question, your sense of the market sentiment right now on the back of hopes that China is reopening. We'll see if we can get establishment with regards to... Bright, just checking one more time if you can actually hear me.
Yes, I can hear you now.
Oh, that's fantastic. So we're talking about market sentiment right now. What's your sense of it, given the news that we're getting out of China, as well as, I suppose, OPEC Plus announcement yesterday?
Yeah, I mean, if you look on the China side, things are a little bit more bullish than the rest of the world, where, the rest of the world, the main focus is still the trajectory of interest rates and, where that's heading and whether or not it increases the chances of, a global recession, whether the recession starts in Europe or the US. Whereas in China, most of the pushback against, Xi's regime is this zero COVID policy. And people, are seeing the screens and they're watching, the World Cup and they're seeing no masks and people are in stadiums enjoying themselves. And they're like, wait a minute, what's happening in China? Why are we under lockdown when the rest of the world is living freely and now they're demanding their freedoms? And we've seen, cities like Guangzhou, for example, starting to ease those COVID restrictions last week. And that's been very good for markets there. And I mean, if you look at some of the Hong Kong listed tech companies like Tencent and Alibaba and Xiaomi, I mean, they're up about, an average of 25% in the past month.
I was going to ask you, how do you position then around the China story? And are there any opportunities that you're starting to see specifically, perhaps when you look at China tech?
Look, I mean, if you are looking to invest in China, you're about close to 2 months late, but there's still an opportunity for you, to invest in there if that's what you're looking to do. But how I'm positioning myself into playing the China trade is by investing, in these big luxury conglomerates like LVMH and Kering, which have a massive exposure to, the Chinese consumer. And these companies have done exceptionally well from 2020 to now without being dependent too much on China sales, because China's been mostly in lockdown during that period. And now that China is easing their COVID restrictions, it's going to be very bullish for these companies. I mean, you look at Kering, it's up also north of 20% in a month. You look at LVMH, it's up. The last time I checked, it was 19% in a month. So these businesses are doing very well because, of the expectation that sales from the Southeast Asian region is going to be much higher, especially now in the holiday season, and perhaps in the next coming, Feb collection after those, catwalks we're going to see in France soon.
Earlier, you and I were having a conversation around Nampak and how the share price movement was quite fascinating to me after the company had released its results. But let's talk about Nampak's numbers. What did you make of the figures?
So Nampak's numbers were interesting. I mean, fifth, growth in revenues, but nothing to show for it on, on the headline earnings side, mostly because of unfavorable trades when it comes to Forex hedges, their business in Nigeria, again, not doing well. I mean, this company has never made money in Nigeria from the Nigerian business, but they're still, operating there and hoping that one day they'll, at least make the investment back. But I mean, it's probably would have been easier and save them a lot of headaches by just, cutting the cancer at the beginning rather than sitting there, because currently they don't even have the Forex they need to bring back the profits here to South Africa, or to repatriate profits, as the word they use there. But I mean, it hasn't been easy operating as a company like Nampak. But these results, I think, were decent, except for the fact that they have nothing to show for this decent set of numbers, which is very sad. Hence why the share price is reacting the way it's reacting.
Before I let you go, a key event for the week that you are keeping an eye on?
I'm not looking at anything currently. I mean, I'm taking a break from results season, so I'm taking, this long weekend of December slowly.
All right, let's leave it there, Bright. Just to basically reiterate to the viewers what we are keeping an eye on, that is Japan GDP. We're also expecting ECB President Christine Lagarde to deliver a speech on Thursday. Those are some of the events that I'll be paying attention to, as well as US jobless claims figures. But that is it from me. And of course, you just heard the voice of Bright Khumalo from Investec Asset Management taking us through the market performance. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.